Imagine a future where Europe isn't just talking about green energy and tech independence, but actually powering it
Yeah.
from right within its own borders,
Yeah.
where the vital stuff for EVs, advanced electronics, renewables, it doesn't have to cross these complex, sometimes pretty unstable global supply chains.
Hmm.
Today, we're doing a deep dive into a project that could be a really crucial piece of that puzzle, maybe even a surprising one.
Right.
We're talking critical metals, self-reliance for the continent, and a location you might not immediately think of, the Ravina Valley in Romania.
Okay.
We've got this really interesting stack of sources here from Eurosun Mining, all about their Ravina Valley project.
Oh.
And this deep dive, it's not just about the project specifics. It's about understanding why it's so important, economically, sure, but also strategically for the whole EU,
Definitely.
and also how it's aiming to set maybe a new, higher standard for doing mining responsibly now in the 21st century.
And what's really insightful here, I think, is how this project, being in a stable EU country, it isn't just about plugging a supply gap.
Right.
It's fundamentally about de-risking Europe's big green transition plans.
De-risking. Yeah, that makes sense.
This whole initiative, it represents a real shift,
Yeah.
moving away from relying on regions that can be, well, geopolitically tricky,
Uh-huh.
towards a supply that's predictable, managed internally. And for Europe, that's a massive strategic advantage, a game changer, really.
That's a powerful way to put it. Okay, let's unpack this. Let's explore Europe's hunt for critical mineral independence, using Ravina Valley as our lens.
Let's do it.
So let's start with that big picture then. Why are critical metals like copper and gold from somewhere like Romania suddenly right at the top of the EU's strategic list? What's driving this urgency?
Yeah, that really gets to the heart of it, doesn't it? So anyone watching global resources, this is key. Our sources point out this major imbalance.
Yep.
Europe used, what was it, a pretty substantial 16% of all the world's copper back in 2018.
16%. Wow.
Yeah, but it only produced about 5% itself, a tiny fraction. Now think about the future. Electric vehicles are booming. That alone is projected to demand 3.5 million tons of copper by 2030.
3.5 million tons just for EVs.
Just for EVs. Add in more urbanization, industrial growth. This gap, it isn't just getting wider, it's becoming a serious strategic vulnerability.
Right.
So for you, the listener, this isn't just abstract numbers. It signals this big reliance on outside regions. Places like China, the
They
DRC.
all come with their own issues, yeah.
Exactly. Geopolitical complexities, ethical sourcing concerns, it's all part of the picture.
So it's not just about needing more copper, it's fundamentally about where you get it from. That seems critical. It sounds like supply chain security, maybe even a bit of European sovereignty over its own goals.
Precisely. And the EU has moved on this quite decisively. They adopted their Critical Raw Materials Act, the CRMA, back in early 2024.
The CRMA, okay.
And this isn't just some policy paper, it's actual legislation designed to secure a sustainable supply of these critical materials like copper from inside the EU.
Right, from within.
The aim is hitting those big 2030 climate and digital targets. And a key number, a concrete goal, is to source at least 10% of its extracted copper from within the EU.
10%.
10%. And the Ravina Valley project. Well, our sources say it was put on the EU's very first list of strategic assets in March 2025.
Wow, okay, so right on that first list.
Yeah, and being on that list is a big deal. It means it can potentially fast-track its permitting process under these new rules,
Ah, okay.
which just highlights how strategically vital Brussels sees this project. It's like getting a stamp of approval from the very top.
That strategic asset listing, that's clearly a massive advantage for Eurosun, cutting through red tape, potentially speeding things up. But, historically, even fast-track projects can hit snags, right?
Okay.
Especially complex environmental stuff. Do the sources give any sense of how solid this new framework really is, or are there still potential bottlenecks, even with this EU push?
That's a really sharp point. The CRMA aims to streamline, absolutely, but it doesn't just wave away due diligence.
Right.
The legislation tries to cap permitting for mining projects at 24 months, which is, frankly, pretty ambitious compared to how long things used to take.
2 years.
But the sources do suggest that while the EU sets the framework, it's still up to the individual countries to actually implement it.
Ah, okay. National level still matters.
Very much so. Romania, as an EU member, is actively working to align its own mining laws with the CRMA. They want to improve efficiency, streamline permits, attract investment.
Right.
So the political will seems to be there. But navigating those local and national rules, That always needs careful handling. No guarantees it'll be perfectly smooth.
Understood. And beyond just being in the EU, what about Romania specifically? Why is it seen as a good place for such a critical European project? What makes it stand out?
Well, Romania brings several key advantages to the table. First, being in the EU means transparency, stable regulations, following European law. That lowers the risk for investors significantly.
Okay, stability.
Yeah, and it's also a country with a long mining history. They understand the industry and generally value the economic development it can bring.
Mm-hmm.
Our sources from April 2024 confirm Romania is actively aligning its laws with the CRMA, specifically aiming to make permitting easier and pull in foreign investment.
Right.
And then there's geography. It's strategically located. It already has good infrastructure, roads, rail, power. And it's just, remarkably close to major European smelters.
Ah, the smelters, where the raw material gets processed.
Exactly. And places like Spain, Germany, Serbia, Bulgaria, Sweden.
Mm.
Being close cuts down transport costs and, crucially, the carbon footprint.
Right, less shipping.
Less reliance on those long, potentially vulnerable global shipping routes. It keeps more of the value chain within Europe.
So it really does feel like this isn't just about one mine. It's leveraging Romania's specific strengths to boost stability and self-sufficiency for, well, the whole continent.
That's a good way to see it.
Especially when you think about all the supply chain chaos we've seen lately. It makes a lot of sense.
Mm-hmm.
Okay, so we've grasped Europe's urgent need, the big why.
Mm-hmm.
But can one project really make that much of a difference? Let's pull back the curtain now on Ravina Valley itself. Let's look at the scale and how they plan to do this responsibly.
Right.
Because this is where it gets really interesting. The sources describe it as one of Europe's biggest undeveloped copper-gold projects and gets the second largest gold deposit in Europe,
Wow.
ranking 14th globally as an undeveloped asset. That's a massive resource sitting there right in Europe.
The scale is, it's remarkable. When you look at the confirmed resources, we're talking around 7 million ounces of gold.
7 million.
And 1.4 billion pounds of copper. And crucially, these aren't just guesses. They're in the measured and indicated categories.
Okay, what does that mean exactly? Measured and indicated.
It means they've done extensive drilling, lots of analysis. There's a very high level of geological confidence, almost certainty, really, that the stuff is there and can be mined economically.
Got it. High confidence.
Exactly. And these resources, they're spread across 3 areas: Ravina, Kolnik, and Sirasada.
Okay.
The main plan right now, the definitive feasibility study, or DFS,
Yeah.
that's like the detailed engineering and economic blueprint.
The blueprint, right.
That focuses mostly on Ravina and Kolnik to start. Sirasada, that's potentially for later, probably underground mining, so there's even more potential down the road.
Okay. Now, a really key thing the sources emphasize, and something I think listeners really care about today, is this commitment to low-impact mining. And we hear that phrase a lot. But what does it actually mean for you, the listener? How is this different from, say, mining 50 years ago? What are the specifics?
That's a vital distinction to make. It means environmental thinking is built in right from the start. It goes way beyond just ticking boxes.
Okay.
For instance, the processing. Entirely cyanide-free.
No cyanide at all.
None. Cyanide has been a big concern historically in gold mining, right? Eliminating it just dramatically cuts chemical use and environmental risk. It's a huge step forward for responsible practices.
Okay, that's significant.
And they're also using dry stack tailings. This is really state-of-the-art.
Dry stack, how does that work?
Basically, instead of a big wet pond of processed rock, they dewater it, filter it, and stack the leftover material, almost like building a stable, engineered landform.
Ah, okay.
It's not just about saving water, though it does that too. It drastically cuts the environmental footprint. It avoids the risk of those catastrophic dam failures you sometimes hear about with older wet tailings dams.
Right, those are disasters.
Exactly. And it means they operate with a closed water circuit, recycling as much as possible. It's just a much higher standard for safety and sustainability.
That really does sound like trying to integrate with the environment, not just, dig a hole and leave. That dry stack thing especially sounds like a big departure from past problems.
Precisely. And they also plan for concurrent reclamation.
Concurrent, meaning?
Meaning they don't wait until the mine closes decades later to start fixing the land. They'll actually revegetate areas like waste rock piles during the operation.
Okay. Reclaim as you go.
Exactly. Minimizes the long-term visual impact, speeds up ecological recovery. Plus, the company's committed to a net 300% increase in forest through a big tree planting program.
300% increase. So Planting more trees than they disturb?
Significantly more, yeah.
Mm.
Offsetting and then some. And then don't forget, the project benefits hugely from using existing infrastructure. Roads, rail, grid power nearby. That minimizes their footprint right from day one. No need to build massive new corridors.
Okay, environment is clearly a major focus. What about the local communities in Romania? A project this big must have a huge impact, good and bad, on the people living there.
Absolutely. And this is where that idea of a social license to operate really comes in.
Mm.
You need the community support.
Right.
The sources really stress strong local backing here. And crucially, they say communities were actively involved right from the design stage of the mining license.
Involved how?
Well, they could raise concerns about things like potential noise, dust, traffic before operations start. So those
Yeah.
concerns could be addressed in the actual project plan. Builds trust.
Okay, proactive engagement.
Exactly. And this translates into real benefits. A big chunk, 45% of the mining royalties goes straight back to the local community.
45%, that's quite high.
It is. Another 35% goes to the county government, 20% to the state. It creates a real sense of local partnership, shared benefit, and jobs, of course.
Huh.
The projection is between 2,000 and 2,500 new direct and indirect jobs. That can really revitalize an area.
Yeah, huge impact locally.
And importantly, even now, they're suppliers, they're consultants. They're mostly local, from the community and the county. So the economic benefits start circulating right away.
Yeah.
They're also doing things like supporting local healthcare, physical activity programs. It seems like a pretty holistic approach to being a good neighbor, not just an employer.
Okay, so we've got the massive resources, the strong commitment to genuinely sustainable practices, looks like, and these community benefit initiatives. So the next logical piece is the money, right? The economics driving it. Does this responsible approach still add up to a compelling financial case? And what's the timeline look like for actually making this happen?
Yeah, let's connect it to the resource economics. The financial side does look quite compelling based on the studies.
Okay.
That definitive feasibility study, the DFS blueprint we mentioned, it outlines a mine life of about 17 years just for phase one.
17 years, that's a long time.
A good long life asset, yeah. And first production is targeted for 2027.
Okay, 2027.
Now, the November 2024 corporate presentation, it shows a pretty robust post-tax net present value, or NPV. That's US $667 million.
67 million NPV. And remind us, NPV is basically...
It's the total value of the project today, considering all the expected cash flows over its life, discounted back to present value. It tells you what it's inherently worth.
Got it.
And the internal rate of return, the IRR, is 24.1% based on their base case metal prices.
24.1% IRR. Is that good for a project like this?
Oh yeah, that's well above the typical minimum return investors look for, especially for a big long-term project. It indicates strong potential profitability.
Okay.
They also project about US $1.3 billion in free cash flow over the mine's life. Those are substantial numbers by any measure.
1.3 billion free cash flow. Okay. Those are strong headline numbers. What really stands out to you in these economics? Is there like a particular sensitivity or something that jumps out given how metal markets move?
What's really interesting actually is how leveraged the project is to metal prices.
Leveraged, meaning sensitive.
Highly sensitive, yeah. The sources show that just a 20% increase in both copper and gold prices, that could boost the project's NPV by a massive 43%.
Wow, 43% jump from a 20% price rise.
Exactly. So while that 24% IRR is strong, even at base prices, this project basically acts like a strong bet on copper and gold going up.
Ah, like a call option.
Kind of, yeah.
Yeah.
It has significant upside potential. For every dollar metal prices go up, its profitability increases disproportionately compared to maybe less sensitive mines. That's attractive for investors looking for growth.
Makes sense.
And in terms of actual production, for the first 10 years, they estimate averaging about 107,000 ounces of gold per year and 14 million pounds of copper,
Okay.
which, yeah, they translate that into about 139,000 gold equivalent ounces a year.
Gold equivalent. So combining the value of the copper and gold.
Exactly. It just gives you a single number to easily compare its overall value output to other gold mines, even though it produces copper too. Helps standardize things.
Okay, high upside, strong base case. What are the next actual steps then? To get this thing built and running, start seeing those returns? What's the immediate hurdle in terms of, say, permits and financing?
Well, getting on that EU strategic assets list back in March 2025, that was huge, designed specifically to speed up permitting
Right, the fast track.
And the sources confirm they're working hard on the final approvals needed for land rezoning. That's called the PUZ approval process.
PUZ.
It's basically getting the land officially designated for mining use. They've already got 16 out of 18 necessary approvals from different review groups. So that's major progress.
16 out of 18. Almost there on that front.
Almost. They're also prepping new documents to get a renewed environmental endorsement. This follows a court ruling back in October 2023, so there is still some key regulatory steps to navigate carefully.
Right. Always hurdles. And financially.
Yeah.
Are they actually ready to build this massive project, or is raising the capital still a big challenge, even with good economics?
That's the multi-million, or rather multi-hundred-million-dollar question, isn't it?
Yeah.
They did secure a pre-development funding facility in July 2025, up to $200 million, and they've drawn down $2.5 million already.
Yeah.
That's an important first step. Covers early work.
Okay, 200 million facility. But that doesn't cover full construction, presumably?
No, nowhere near. Full construction will likely need hundreds of millions more, and the market conditions right now, they're tough.
Yeah. Interest rates, uncertainty.
Exactly. High rates, global economic jitters, investors are cautious. Raising that kind of big equity or debt package is challenging, even for a project that's strategically important and, largely de-risked like this one seems to be. Eurosun is still a development stage company. They reported losses recently, over $1.1 million net loss in Q2 2025.
Okay.
So they need to keep hitting those permitting milestones, keep showing progress, maybe bring in strategic partners to bridge that gap and get the full financing needed to build the mine and reach production.
Right.
It's a significant hurdle, definitely, but probably not impossible for a project with this kind of profile.
So even with the strong economics, the vital strategic angle for the EU, the commitment to doing things right, raising the actual cash is still the big bottleneck. That really sums up the challenge of building anything big these days, doesn't it?
It really does.
Wow. Okay, this deep dive into Eurosun Mining's Ravina Valley project.
Yeah.
It really paints a fascinating picture, doesn't it?
Yeah.
This intersection of strategic resources, forward-thinking environmental practices, and real community impact, all happening right inside the EU. It's quite a case study.
It absolutely highlights how critical metals aren't just commodities anymore. They're about, national security, regional self-reliance, pushing the boundaries on innovative, cleaner mining, and creating value that's shared, hopefully, among everyone involved, especially as Europe drives towards its green and digital future. This project really shows how expectations for mining are changing.
So what does this all mean for you, the listener?
Well, this project, it gives us this fascinating window into those huge global challenges: decarbonization, securing industrial supply chains.
Yeah. And it really makes you think. Given this push for a critical metal independence and the simultaneous demand for genuinely low-impact mining, how might projects like Ravina Valley start to reshape that balance between economic need and environmental responsibility, not just in Europe, but maybe all over the world in the years to come?